These stocks will make you rich. High growth. Hello guys, welcome to Stacking Stocks once again, and many thanks for tuning in today. This is the go-to place for amazing content that will most definitely entertain and educate you. Have we disappointed you before? I'm sure your answer's a big no. All we need to do is get a comfortable spot to sit with a cup of coffee and have a chat. And in case you weren't part of the previous session, let's take a short trip back and recap our discussion in the last session. Does Argentina adopt Bitcoin? President Alberto Fernandez of Argentina stated that they're open to the idea of adopting Bitcoin to eliminate the inflation problem. However, the president of the Central Bank of Argentina, Miguel Pese, opposed that idea while raising several concerns. You definitely need to know about that, so if you haven't seen that video yet, you can still see it on our channel. So let's get into the great topic that we've prepared for you today. Are you an investor looking for high-growth stocks that will earn life-changing wealth? Do you want a portfolio with long-term success and consistent stock dividends? In today's session, we're providing a handy guide to high-growth stock investment. The key is to know which stocks to buy and when to buy them. Have you figured out which stocks you want to invest in? Are you monitoring and researching the stock before splashing your money in it? We're here to guide you on the best stocks to buy and when to buy them. And as usual, our content is based on comprehensive research, and it's meant to guide you on deciding which are the best stock investments. Before we delve into the high-growth stocks that can make you rich, you need to understand what we mean when we say high-growth stocks. We have a brief outline from the Motley Fool. Growth stocks are companies that increase their revenue and earnings at a faster rate than the average business in their industry or the market as a whole. Growth investing, however, involves more than picking stocks that are going up. Often, a growth company has developed an innovative product or service that is gaining share in existing markets, entering new markets, or even creating entirely new industries. Unlike value stocks, high-growth stocks tend to be more expensive than the average stock in terms of metrics like price to earnings, price to sales, and price to free cash flow ratios. Do you think you have a good grasp of what high-growth stocks entail? Are you aware there's no way of building wealth that has been more consistent than the stock market? We've prepared a concise list of high-growth stocks that can make you rich. All that's required of you, the investor, is patience to allow the investment to play out. Remember, even Rome was not built in a single day. It takes time before these stocks materialize into a lifetime of wealth. Now here's a list of 5 high-growth stocks that can make you rich. First, Teladoc Health. Have you heard about this telehealth giant? Some of you might call it a one-hit wonder because it hit the headlines during the coronavirus pandemic. Nonetheless, Teladoc Health was in the right place at the right time. But we can't just focus on the results of one year. If we do, we would be ignoring a very clear sales trend and treatment shift that we've witnessed in the U.S. healthcare space. How keen have you been with the U.S. healthcare space? You see, Teladoc Health had an annual revenue growth averaging 74% the 6 years prior to the coronavirus pandemic. Now, does that sound like a one-hit wonder? Certainly not. Are you a stock investor fascinated by the healthcare space? Teladoc Health should be your go-to company. The company's telemedicine services are making it more convenient for patients to get in touch with their doctor or a specialist, and it's also making life easier for physicians by giving them an avenue to keep in touch with chronically ill patients. We can't say that telehealth will replace all visits to the hospital. Some in-person visits will still be necessary. A more personalized and convenient healthcare system can lead to improved outcomes for high-risk patients. What does that mean for health insurers? If you're a health insurer, it means that you'll spend less money. The Motley Fool reports that Teladoc also differentiated itself by acquiring leading applied health signals company Livongo Health during the fourth quarter. Livongo collects huge amounts of data on patients with chronic illnesses and leans on artificial intelligence to send its members tips and nudges to help them lead healthier lives. At the time it was acquired, the company was already profitable on a recurring basis, despite the fact that it had penetrated only a little over 1% of the U.S. diabetes market. Can you see why Teladoc Health is a high-growth stock with so much potential? The company is set to dominate personalized care for the next decade and far beyond. This is a good stock to consider for making you rich if you buy shares in it. The next high-growth stock that we'll talk about is EverQuote. This is another company that's not very popular in the stock market. But what do we know about it? We do know that small cap stocks have the ability to make investors rich. EverQuote is one such small cap stock that's found itself at the center of a steadily growing industry. Advertising and distribution are expected to rise on the average of 4% every year through 2024. Specifically, the digital side will grow by 16% yearly, according to EverQuote. We all know the importance of pricing out policies in the stock exchange. EverQuote has an online market that enables its consumers to price out policies efficiently. The marketplace further enables the insurers to gain from their advertisements. Now you can see why EverQuote is a considerable stock, right? But that's not all. EverQuote is growing past auto insurance. Currently, its market accommodates health, dental, and life insurance policies, among others. These new investments may seem to contribute in invisible percentages towards the total sales. However, they register a higher revenue growth rate than the auto insurance policies. Vertex Pharmaceuticals. Biotech stocks aren't as numerous or as beneficial in the stock exchange, but Vertex Pharmaceuticals stands out to be unique and enrich its shareholders. What makes it different? Vertex has been customizing and making drugs generating sales of $1 billion or more on its total sales annually. You'd agree that we've witnessed this, especially with the development of gene-based therapies aimed at treating cystic fibrosis. This venture earned Vertex almost $3.9 billion during the first year of pharmacy shelving after the United States Food and Drug Administration approved it almost 5 months ago. In the biotech arena, Vertex is a beast that can't be easily defeated. Considering the high rates of the dominant CF mutation in almost every patient that suffers from it, the Trifecta segment of CF treatment could finally manage to bring $6 billion in yearly sales. Can you imagine that? Vertex Pharmaceuticals is indeed a successful stock worth considering. I mean, it closed in March with over $6.9 billion, both in cash and in cash equivalents. Isn't that amazing? These earnings are capable of providing the funding of lots of drugs that can be manufactured internally. Vertex Pharmaceuticals is truly a success, and it's shown opportunities for further development. Do you want to invest in biotech stocks? I believe you have an answer to your question as to which one you should invest in. Our fourth stock of interest is Lovesac. Here's another beneficial and unique venture that one would consider if you wanted to get rich. Take it from me, most people don't always think of furniture stocks and matters concerned with innovation. I think you'd agree with me on that one. It may be true that Lovesac tripped some time back, but it never fell. Its current sectionals are made in a way that one could arrange in various ways to fit their needs. These sectionals come with over 200 distinct covers made from recycled plastic bottles of water. This kind of creativity is not only lovely, but also facilitates environmental protection. No wonder it has a strong connection with millennials. Many investors complain about the pandemic, and their complaints might be justified, but the management team of Lovesac handled the challenge differently. As most of the brick-and-mortar furniture stores closed down, the Lovesac team focused on a direct-to-consumer and pop-up showroom model, which became very efficient for them. Their unique strategy earned them significant gains for the 2 previous years. Even though it may not seem so, Lovesac could effectively double its total sales in the next 4 years. And finally, let's take a look at Etsy. What is Etsy? I'll tell you what it is. It's an e-commerce that could make you filthy rich. But again, I know you'd laugh at me saying that probably it's nothing close to Amazon. By the end of this video, you'll agree with me that that's a great fallacy. Etsy provides small commercial customization and personalization that Amazon can't provide. Its major secret has been facilitating an effective customer engagement, thus attracting more customers. For instance, its habitual buyer growth tripled during the first quarter of 2021. Well, there you have it, 5 great stocks to invest in. That's all we have for you today. Once again, thank you so much for joining us today here on Stacking Stocks. Don't forget to subscribe, like, and share. Until next time, remember to invest wisely.